Hello and welcome to Weekend Investing Daily Bytes. Fed is going to decide what happens to our market. The Fed meet ends Wednesday night around 10:30 p.m. Indian Standard Time, and that's when it will be figured out whether they are raising by 50 basis points or 75 basis points or a shocking 1%, as some people are estimating. So we are kind of, our fate is stuck with the fate of the US market and the US Federal Reserve. US is the mother market, so all markets tend to follow the lead from there. We are dependent upon capital flows from the Western world. We are dependent upon FDI. So we are kind of, dancing to their tunes, regardless of the fact that India remains one of the fastest growing markets. We are going to probably grow at 7.5% or more this year. And things are not so bad in India, but the externalities are making us look very, very vulnerable as we basically go down in sync with the rest of the world. So a reasonably volatile day, directionless, ended up just a 0.25% down on the Nifty. At one point, it was down 100 and odd points, and it also came into green. But pretty much a yo-yo day. I think waiting for the Federal Reserve tomorrow night. Tomorrow also may remain the same, although it's tough to say what happens in the market. So energy stocks, auto stocks, banking stocks were down. Real estate, metals, pharma and IT were bouncing from the drubbing that they got in the previous session. So on a weekly basis, almost all sectors are down pretty badly again. Metals down 6%, private banks down 5.5%. IT is down almost 5%. Nifty itself is down 4.2%. Bank Nifty is down 4.8%. So a pretty sort of a tough week that went by, which erased a lot of the gains that we had saw over the month. On a 3-month basis, of course, IT, metals, commodities and some banks look bad. In terms of major indices, Nifty Next 50 was the only index up at 0.3%. Adani stocks doing well after Total is investing more into one of the subsidiaries, and there is talk of more fundraise from overseas. CNX 200 is down 0.2%, 500 down 0.21%, Nifty down 0.27%, mid and small cap also down 0.3 to 0.4%. In terms of weekend investing strategies, NNF10, which tracks the Nifty Next 50, was up 0.8%, 0.9% rather. LTC Next 200 up 0.3%. MI30 was flat, MI80H was flat, EverGreen down 0.25%, all cap down 0.25%, MI50, MI25, MI80H2 all down between 0.5% and 0.25%. MI35 and MI20 were more harder hit, more 0.7% and minus 1.17%. So pretty much, sort of, I wouldn't call it dull, but weak day. I was expecting a bounce day today, but that didn't happen. Some of the stocks were bouncing. So Infosys was up 1%, State Bank was up 0.5%, Bharti was up 1.6%, NTPC up 1.6%. But other than that, the major stocks that caused the Nifty to go down were HDFC Twins, down almost 1% each, HDFC Life 1.67%. IndusInd Bank actually dropped 2.46%. So the IndusInd Bank, I've noted, is very near its strong support area, and if that breaks, then there'll be a big breakdown on that. So keep it watch on that. Sun Pharma down 0.5%. ONGC, Oil India, and the other oil related stocks, there was some profit booking on that. Reliance also down 1.3%, although oil has not dropped. Crude oil has not dropped yet. There is profit booking on oil counters. Asian Paint down 1%. Bajaj Auto down 5% even after they announced some buyback. So a pretty tough drubbing on that. Levers down 1.18%. ITC very strong at plus 0.3%. And cement segment and steel segment also sort of holding it up there, with Hindalco down 2.2%. So mixed bag. Pharma is up a little bit, but not very great moves either way. In terms of the biggest winners today, TCNS Clothing up 8%, Shilpa up 6%, Adani Enterprises, as I mentioned, up 5.5%. Paytm was up 4%. So Paytm at least has stopped falling, which is a very positive sign. It may be making a base here, and we'll have to see from where it breaks out and builds back up if it has to. Alkyl Amines up 4% also. In terms of the down stocks, as I mentioned, oil, MRPL, which was very, very strong, is taking a sharp correction, down 11%. Route Mobile down 7%. Aptus Value down 7%. GR Infra second day down. There were raids and arrests of company officials. And Oil India also down 5.8%. We are holding Oil India and MRPL, so some strategy did get hurt because of that. So as I mentioned in the very beginning, Fed to decide the fate of the market. So where are we on the Nifty? We are near 15,750. And if you recall, in April, May, June, July, August of 2021, Nifty actually came to a standstill in this band. Approximately 15,500 to 16,000 was this band, and we were stuck here for almost 5 months. And once a market has rotated in a particular channel for a long period of time, that becomes a good support. And that's what we have seen when the markets came down in March. It took a good support, bounced up again. It came down again in May, took support, bounced up again, and now we are here in that band again. So it is providing ample support. However, what we can note is that each bounce is becoming smaller. So we kind of bounced here, then we bounced here, then we are bouncing here, and now we may bounce, but this support should not give up, because if this support gives up, then we will get open to somewhere around 14,000 to 15,500 sort of range. So this support should not breach, and once this support is breached, if it support is breached, there will be a lot of selling, sort of a capitulating type of a move that can come. So we don't want to see that, but not in our hands. It is in the hands of the Fed. The probability of them raising 0.75% is now 95%. If they surprise the market by 0.5%, I think market will go up. If it comes at 0.75%, I still think the market will bounce. But if they raise by 1%, I think we will crash down hard. So that's the sort of expectation that I have in my mind. I am usually wrong. I'm usually right 50% of the time, and of course I'm wrong 50% of the time. So it doesn't matter what I think. So from that perspective, we are at a crucial point in the market. However, having said that, one need not be all pessimistic and sad about the market. We have now spent a good 7 to 8, almost 8 months in a corrective mode, and this kind of consolidation of 8 months is also considered to be quite good, unless we get some fresh new impetus to go down. In the past also, we've had several corrective moves that ended in 6 to 12 month type of period. So all is not lost, but yes, unless we can somehow tame the inflation, which it seems that it is going out of control still after everybody being so hawkish. Oil is still 122, 123. So from all those perspectives, if I have to bet on where the market is going, I think market may go lower, but then it's anybody's guess, I guess. Another sort of insight that I wanted to share with you and drill that into your psyche is that don't ever consider that a 90% drop is something that cannot get worse. We've seen it in Yes Bank, and that is just one typical example that comes to mind, but it has happened in so many other cases where after 80-90% drop a person says itna gir gaya ab kya karega aur but that should not be the case. Your capital, whatever is remaining, in Yes Bank case, even after the 90% drop, if you got out at 40-50 rupees, whatever it was, and today it is 12 rupees, so another 70% drop happened after that. So every drop is a capital lost in case there is no hope for that stock to go back. I'm not judging the Yes Bank prospects by saying that it will not go up. It may go up, I have no idea. But what I'm saying is that if you are in a position where you did not get out at the right time, maybe you should have got out here, maybe you should have got out here, but nevertheless, if you are at minus 90% in some stock, I would still say reevaluate, and still you can save that 10%, because you never know whether this will going to happen or not. And why I am bringing this up is because RBL has dropped around 90%. RBL Bank, sorry, not RBL Limited. And while there is nobody to say whether this is going the Yes Bank way or not, and I hope it does not, but it is at an all-time low. It is dropping with huge volumes. It has taken out its support with a big red down move. Things don't seem to be, looking so good for it here. So if I were to look at it from the perspective that, at least let it break some resistance before you want to come in, maybe let it form some pivot here, maybe let it try to break a higher high on a daily basis. This is a weekly chart, but even on a daily basis, if it breaks a higher high of some previous pivot, at least wait for that point to jump in, because right now it's a falling knife, and if you're holding this and it's dropped 80-90%, you may want to reevaluate whether you want to risk your remaining 10% in this or not. A stock which has dropped from 700 to 85 rupees, there's something wrong happening, right? I mean, it wouldn't have done that otherwise, given the fact that the market is not yet dropped as much in terms of any particular sector. So that's all I have on the Daily Byte today. Thank you so much for watching. Please do like and subscribe the channel. Please share it with your friends and family. And don't get disheartened. Markets have these phases of down moves. Up moves will also come. Just like every night, after every night the day comes, this will also happen. So take that with a pinch of salt and continue your journey. Bye.